Hello students, in present video I am going to explain first problem on accounting equation topic. On accounting equation, till now I made one video. In that video I have explained the accounting equation concept. So video link I am giving in the description box. This question I am taking from Kalyani Publications book. See the problem? Show the accounting equation on the basis of the following transactions. First one, Ram started business with 25,000 rupees. Second, purchased goods from Shyam 10,000 rupees. Third one, sold goods to Sohan for 1800 on credit. And in brackets he is giving that these goods cost is 1500 rupees. So with this information, accounting equation we have to show. So accounting equation is equity is equal to assets. Then first point, Ram started business with 25,000 rupees. So what happened exactly? In rough notes I am showing. This is the firm. In firm's books we are preparing this accounting equation. No? So think from firm's point of view. Ram is the owner. Ram started this firm by bringing capital. How much? 25,000 rupees. So from owner, cash is coming. This was exactly happened. And here, when cash is coming into the business, then asset increases, no? Asset name is cash. So in first transaction, one asset known as cash is increased by 25,000 rupees. And owner is investing money into the firm. So this is known as capital, no? Equity is equal to liability plus capital. So liability means loan taken from outsiders. Capital means the amount which is invested by the owner. So in present transaction, capital is affected. Capital is increased by 25,000 rupees. Finally, capital is equal to cash. Equity is equal to asset. 25,000 is equal to 25,000. So accounting equation is satisfied. Second one, purchased goods from Shyam 10,000 rupees. Here Shyam is supplier, no? Purchases are of two types. Cash purchases, credit purchases. Here purchased goods from Shyam. So with the purchases word, supplier's name is given. When we have to remember supplier's name? In case of credit purchase only. So here the meaning is we have purchased goods on credit. So this is firm. Our supplier is Shyam. From Shyam, goods are coming into the firm. And nothing is going to Shyam because we have purchased these goods on credit. In future, we are going to pay. In this transaction, goods are coming. So goods means asset. So because of this transaction, one asset is increased. That asset name is goods. How much worth goods are coming into the firm? 10,000. So goods value is increased by 10,000. Asset value is increased by 10,000. And we purchase these goods from Shyam on credit. So Shyam is becoming a creditor. Creditor means outside liability. So in this transaction, equity side, one liability known as creditor is affected. Creditor is also increased by 10,000 rupees. So because of this second transaction, equity side, capital is not affected, liability is affected. Liability name is creditor. A new creditor is created with 10,000 rupees. And the asset side, cash is not affected because this is not cash purchase. Credit purchases, no? 10,000 worth of goods are coming into the firm. So asset is increased by 10,000 rupees. So after this second transaction, what is the final result? Creditors worth 10,000 we have. Capital amount is 25,000 rupees. Cash 25,000. Goods 10,000. So this is liability side, this is asset side. Liability side, creditors plus capital 10,000 plus 25,000, 35,000. equity is equal 35,000. Asset side, cash plus goods 25,000 plus 10,000, total 35,000. So equity is equal 35,000, asset is also 35,000. So accounting equation is satisfied. Next, third one, sold goods to Sohan for 1800 on credit and goods value 1500 rupees. This is firm. Customer's name is Sohan. Firm sold goods to Sohan and sold goods to Sohan for 1800 on credit. Clearly is giving that this is credit sale. So from the firm goods are going, but to the firm nothing is coming. How much worth goods are going from us? 1500. So asset side, because of this third transaction, goods are decreased by 1500. From 10,000, 1500 decreased. And firm sold goods to Sohan, no? Goods value 1500 and the firm sold it for 1800. So Sohan is a debtor for how much amount? We are selling to Sohan at 1800. So in future Sohan has to pay 1800 rupees to us. For this 1800, Sohan is becoming a debtor. Debtor means asset. So in this transaction, one asset, goods, decreased with 1500 and another asset, debtor, is increased with 1800 rupees. So this transaction is affecting two assets. One asset, goods, decreased by 1500. Another asset, debtor, is increased by 1800. So asset side, this is the effect. And the equity side, left side, effect is 1500 worth goods. Firm is selling at 1800. So profit is 1800 minus 1500 is equal 300. This profit belongs to owner. So to owner's capital, we should add this profit. Therefore, capital is increased by 300 rupees. So final effect is asset side, finally how much is increased? One asset, debtor, is increased with 1800. Another asset, goods, is decreased with 1500. Final effect is there is an increase of 300 in assets. And the liability side, capital is increased with 300 rupees. So 300 increase equity side, 300 increase asset side. So here also equity is equal to asset. Accounting equation is satisfied. So final amounts are creditors 10,000, capital 25,000 plus 300, 25,300, cash 25,000, goods value 10,000 minus 1500 is equal to 8,500, debtors value 1,800. So equity side 10,000 plus 25,300 is equal to 35,300. Total equity value 35,300. Asset side 25,000 plus 8,500 plus 1,800. Total is 35,300. So finally, equity 35,300 is equal asset 35,300. So this is a solution. Take a screenshot of this. So this is the end of present video. Hope the video is helpful to you. Thank you.